Step into the fascinating realm of industrial metals, where steel prices fluctuate and market indicators are the pulse of an ever-evolving industry. Welcome to Cup of Joe, the metal podcast paying homage to our founder, Joseph T. Ryerson. Settle in, savor a cup of Joe, and let the conversation begin.
Welcome everybody here from the Metalverse. I like to say as our president and CEO likes to refer to it, the Metalverse. Everyone interested in what's going on with metals, it's another episode of Cup of Joe. I'm Mike. That is Nick. How are you doing today, Nick?
I'm doing great, Mike. I think we might actually have the phrase Metalverse trademarked within Ryerson.
We do. Yes.
Some
yes.
Fact, yeah.
Yeah. I wasn't able to mention it until we had that. So no, it's out there. It's in the Metalverse.
Well, I'm happy you're not going to get sued for that.
Well, I mean, I don't know. It's June already. We've got a lot of exciting things to talk about today. We're gonna have a special guest on to talk about what's been going on in the crazy world of aluminum ever since you called it boring circa March.
Yep.
It's gone off the wires. It's gone haywire. So everybody in that's experiencing the fluctuations in aluminum can blame Nick for calling it boring.
Should have just kept my mouth shut.
Yeah. Aluminum said, hold my beer. Yeah. So why don't we get into it? Because we got a lot to cover today.
Yeah, let's do it. So as we always do, first things first, we do have to cover the safe harbor provision. These are the opinions of Nick Webb, Mike Carrozzo, and our special guest, Jim Reed, who we'll be introducing here in just one second. Do your own research. But yeah, as Mike said, I got the cup of Joe, but it's definitely cold brew season at this point. It's a little toasty here in Chicago, which is a welcome change. We're here for it.
Yeah.
Mike and I do want to introduce the idea that here in the next week, we are going to be doing an interview with Josh Spores. For those who don't know, Josh Spores works over at the CRU, which is one of the research and data publication entities that publishes one of the biggest, if not the biggest, steel index here within North America. It sets a lot of physical contracts for service centers and large OEMs. It drives market movements, and it's also the contract. The CRU is the contractor, the index to which steel futures settle. We thought it'd be a great time to bring Josh on and really dive into not just the CRU and how they create their own index, but also juxtapose that against the new Nucor CSP index and the Cliffs index. We feel like it's a great time to have this conversation. We're not going to take it easy on him. We're going to pepper him with all the questions. And Mike, I don't know if you want to do it here, but I would say I encourage anyone who's listening now, if you've got questions you want us to run by him as we interview him next week, we will be happy to do so, assuming legal allows us to do so. We will absolutely send those questions his way. So either by way of email or by way of the chat function within this presentation today, let us know if you have questions. And then the other thing Josh does is he actually provides forecasts on steel prices. So hopefully we can get some insight into where he's forecasting steel prices, in addition to what we're going to talk about today. But it should be a really fun and timely conversation.
Yeah, I'm looking forward to it too. What I really like about it is Josh actually reached out to us and you more namely.
Right.
Read something that we put out from the last Cup of Joe where we were talking about. It's a very timely topic, and it wasn't. He reached out and said, "Hey, really liked it. Let's just to clarify one point." And Nick and I huddled up and we're like, "Let's see if we'll come on the show." And instantly he came back, and I think that speaks to what we're really trying to do is educate the marketplace, and having someone like Josh come on, I think is going to be a really good point to clarify the conversation. So really looking forward to that. And like you said, if anybody has questions for this episode in particular, and for Josh, share them in the chat in the bottom, and we'll make sure we get in front of Josh, and of course, use that for today. Questions for Nick and for Jim Reed, who's our director of the supply chain in the West region. Jim, how are you doing?
Great. It's great to be here again with you guys. It's always fun time, interesting time. Looking forward to today's conversation.
And it's really hot by you, from what I hear.
A little toasty where I'm at today. Going to hit about 108. But Mike, I've been told it's a dry heat, so it's okay.
Yeah. There is a difference. Anybody who experiences humidity could tell you. Yeah.
Yeah. Yeah.
Makes
A dry heat here,
Yeah.
108 here versus 108 in Chicago.
Right.
I'll take this all day long for sure.
Right.
Yeah.
Yes. And those of you, Jim has been on, maybe the third or fourth time you've been on. A lot of times we talk to you about stainless, but we've cornered you to talk a little aluminum today instead.
Great.
We'll still bring you into the stainless conversation too. Can't
Yeah. I mean, I think to set the landscape a little bit, similar to, Nucor's CSP and Cliff's new index kind of being, a new equation for the market to think about. We've gotten a lot of new things to think about within the aluminum space over the last 2-3 months. So similar to our conversation with Josh Spores, we felt that this would be a very timely, instance or opportunity to really dive in with the expert who's talking to the steel mills, who's actually buying, physical aluminum, bringing it into North America or Mexico specifically, which is a hot button item as well. So there are a lot of headlines. We want to kind of tear through the fluff. I've attempted to do so a little bit, but certainly not as good as what we can do here today in this conversation.
Yeah, it's been a crazy 60, 90 days for sure in the aluminum world. I mean, where do you start? I mean, there's so many things going on from the tariffs put in Mexico and all the products coming in to the Russian ban at the LME, right? I mean, it's just been across the board and causing some disruption in the world of aluminum for sure and supply.
Yeah, so Jim, I guess let's kind of start there. You brought up Mexico. Let's start with that aspect. You want to give us just a quick download of what's transpired within Mexico, how we're seeing it, how our customers may be handling it, how can our customers best navigate this complicated landscape?
Yeah, in Mexico, obviously the dust is still settling, right? The Mexican government came through and imposed a tariff on all stuff coming into Mexico. It could be 25-30% tariff on aluminum. They're redoing their IMEX program. If you're into Mexico, you know what the IMEX program is. It's for the ability to bring material into Mexico, fabricate it, process it, and ship it to the U.S. So they're redoing that process. If you don't have an IMEX program, you're going to pay the duties. They're changing the Rule 8 down in Mexico for internal Mexican importers. So they're going to eliminate the Rule 8 segment of the tariff as your Rule 8 expires, you're not going to be able to renew it. So they're really cracking down. They're putting big time duty. It's almost like they're following some of the Section 232 tariffs that President Trump put on. They're really following a lot of those right now into Mexico for sure. It's causing some havoc. It's causing enough havoc that, and I think I mentioned this to you and Mike prior, we're actually seeing some quotations from some of our Mexico customers asking for a domestic U.S. product now.
Interesting.
To check the pricing compared to what was coming up from China, right?
No, I'm kidding.
And Jim, is that a phenomenon just for our listeners who may not be buying and selling aluminum every day? Is that a fairly unique phenomenon for that to be taking place? I guess when would we have last seen Mexican entities buying domestic product?
Yeah, quite frankly, it's been a while. It's been a minute for sure. And this is not just happening with aluminum. We're saying the same thing on the carbon side right now also. And we're getting more and more, we've been approached by more and more customers in Mexico asking us to go to the domestic carbon suppliers to be able to support that because of the tariffs that's going in. So the dust is still settling for sure in Mexico. Internally, we're still going through it and handling it, figuring out what's going on, but there's definitely some movement for sure.
It's interesting to see play out live because I mean these are the real inner workings of some of the things we've talked about in, I'd say, a couple of Joes from a year or 2 years prior, where we talked about nearshoring, friendshoring, being closer to your allies. This is kind of what it looks like, I suppose, and I guess on one hand, that is the point of this protectionism, is to kind of bring allies, bring regions closer to one another. And it does appear to be having a bit of that impact. I mean, it may be early on in that trend, but it does seem like it's doing that role a little bit.
I totally agree with that. I mean, matter of fact, this morning I had a visitor in from India talk about some stainless bar product, and he said, "I don't even want to mess with Mexico. I'll come to the U.S. I'll deal with the 25% tariff in the U.S. But it's too difficult and challenging to do anything right now in Mexico for his company." So it is the whole onshoring, bringing it back home. We're seeing more activity with that. We're seeing more activities for quotes. So it's an interesting time not just aluminum, but across, right?
Yeah, for sure. And all of that being said, I mean, it sounds like if that trend is to continue, that likely, ramps up the need for US or Canadian production, which, that could tighten up market conditions north of the border.
It could. Plus, you have the additional capacity all coming on board too in the next couple of years, right? You have ADI, you have Novelis, you have a new Mexican mill that's going to start producing common alloy in 2026. Because right now, there's really not a common alloy manufacturer in Mexico to produce the volume. So it's going to be interesting with the new additions and capacity, and then what's going on with the tariffs. For sure.
You brought up new capacity additions, and I think you mentioned ADI. I assume that's Aluminum Dynamics, which is the aluminum subsidiary or entity of Steel Dynamics. This is kind of their first go, as I understand, into the aluminum world. How's that coming along for them?
I guess it's coming along real well. I'm not allowed to say a lot from what they've told us, but they're going to focus on automotive, obviously, can sheet, and then have some availability for some common alloy.
Okay.
And it looks like 2025 does look good from what we understand.
Okay. So capacity's ramping up. Okay.
Yeah, exactly. Novelis the same way. More can and auto sheet, but having some room for some common alloy too, which will be nice.
Given their geographic locale, you think some of that's going to go south of the border into Mexico, or you think most of that's going to stay domestic? If you had to guess.
If I was going to guess, just because of the need for the aluminum in Mexico, Nick, some of it's got to go to Mexico. There's so much demand in Mexico. We're pulling in right now. The amount of volume that's coming in from China going into Mexico is staggering. That's going into Mexico. So I would have to believe that they're going to try to nip away at that for sure.
How much does the Russian ban on aluminum impact the rate? Because now you have this tariff in Mexico and ban on Russian material, particularly aluminum, right? How much does that continue? That now, how much more, I guess, restraint does it put on all the other producers?
It's kind of funny because the LME, as you all know, the LME was pretty loaded with Russian material, right? I mean, at one time it was like over 90%, if I'm not mistaken. It was pretty heavy. So the U.S. buyers were already looking elsewhere to get the material, right? So where they could do it. So it's putting a crunch into it, but I think it's going to work itself through because demand overall isn't booming right now, right? It just, the rest of the world is still relatively soft. There's not a big demand. So right now, I haven't seen anything, but maybe as it still continues to play out, we'll see something. Nick, what do you think about the LME ban for Russia?
Yeah, I think for the most part, I tend to agree with you. I mean, and you could probably speak to this better than I could, but I think it's confirmed here at Ryerson for a long period of time, we have not been buying Russian units of nickel, aluminum, or carbon, correct?
Correct. 100% correct.
Yeah. So, I mean, if you extrapolate that across the industry, maybe not everybody had followed the exact same plan, but I think a little bit of that we've planned around as an industry here in North America to make sure that impact doesn't, squeeze us too hard.
Yeah, agree. We've actually had some, Mike, that we had some. We were notified that we had some product that they couldn't identify that it wasn't Russian material, so we refused the shipment. We don't want to take the chance. So Ryerson has been very good and diligent in not accepting Russian material, and the domestic mills know that, right? One big key thing is we have a mill here in the U.S. that was buying or is buying some Chinese slab, and every now and then we have a customer coming to us say, "Can't take Chinese." We go, "Well, it's not against the law to take Chinese. Whoever paid the tariff coming in has already absorbed whatever the cost was on that tariff. So it's not against the law, it's just a preference whether you want Chinese or don't want Chinese, right? But it's not against the law."
Who's the biggest producer worldwide of aluminum?
The biggest producer of
Country.
Mills?
Region or country.
I mean,
right?
I'd have to say, Arconic is huge, right?
Okay.
But you can't rule out Novelis with all the different branches of Novelis. We have two of the big ones right there.
So it's domestic would be the largest producer. So just so I understand, right? You have this 25% tariff, Mexico. There's bans on Russian aluminum, whether it's preference or not to get it from China or not. Where else are you getting aluminum from?
That's a great question.
Where's it coming from?
It's very limited, right? Right now, there's still the old countervailing and anti-dumping things that came on, right, a couple years back, and I think it was on a couple, Joe. We talked about that, matter of fact. So very limited. There's still stuff coming in, right? But it still has the normal 3% tariff plus the Section 232 tariff of 10% on aluminum, right? And there's many mills that were in countries that were automatically not able to ship in because of the dumping duties and the countervailing that they hit them with. So very limited aluminum coming in. Is it coming in? Yes, it is. There's no question it is. But we are seeing some, and we're partaking in some of that, but the majority of our stock for sure is domestic.
And a question, I guess, then to you, Nick, is you've talked in past episodes about smelters maybe curtailing production because it's not profitable in the aluminum sector. Does that change that strategy now? Maybe that there's some limitations on some of the other producers worldwide?
Yeah, and price is going to be the function that solves that. I mean, if price creates an incentive to keep things moving, that's what's going to allow them to, stay profitable, keep the lights on, keep producing. Yeah. And we actually will be talking about that in a little more detail here in just a few slides, or when we get back into the slides. But yeah, I think it absolutely has that potential to, as you protect off or wall off foreign supply or make it more expensive by way of tariffs and things like that. Yeah, you do create a further incentive for those regions who are being protected to keep production booming.
Agreed. Now, Rio Tinto, they declared force majeure on some of the stuff out of Australia because of the shortage of natural gas, right? But then you also read that they're in the process of buying another smelter in was Australia, I think. So it's all about the money. Follow the dollar for sure. Yeah.
So Jim, I guess, we probably have a lot of our customers and OEMs on here. We're probably hearing all this saying, oh crap, it sounds like things are about to get really tight again. Should I be panicking? I guess the question is, as Ryerson, how are we seeing the market with regards to, I don't want to say ensuring or guaranteeing, but how do we get customers comfortable with the idea that we're going to be able to get metal for them? I guess, how are you feeling about availability? How are you feeling about lead times?
That is a great point. And any customer on the call that would like to buy a couple 100,000 pounds, just give us a call. We have the capacity. We can get it for you for sure.
Should we flash up your phone number right now?
There is no concern about availability or product at all. Matter of fact, all the domestic mills are looking for more new capacity coming on board. I would say things are relatively stable with that, right? We're a couple of years back, was it 21? We were in allocation for those of you that were around about. Yeah, I'm not seeing that for sure. It's pretty available right now.
Yeah, and we'll talk about this here in just a few minutes, but I think part of that could be, just leaning back on the equation of we're not seeing demand growth of 10, 15, 20% year over year at this stage. We may have been seeing that back in 2021, 2022. But demand is okay. It's not booming. If we were in that type of environment, these things might be way bigger pinch points. But I think right now, with demand where it is, which is, squishy, it's okay. It seems like a lot of these headlines that normally historically can be very market moving, feels like the common alloy market is still mostly operating business as usual, it seems.
Agreed. In talking to the mills, we're not hearing about any huge changes in pricing or conversion. The LME, the Midwest Premium, that's separate. And you'll talk about that, I'm sure. But I mean, it's relatively stable. Not a lot of movement going on. Now, one area that's interesting, quite frankly, in aluminum is your 6061 heat treated plate, right? Right now, over 50% of the plate that come into the U.S. comes import. And 50% of the whole demand comes from import, just because the U.S. domestic mills are really taking it and working it on the aerospace, like the 2 series, the 6 series aerospace, and the 7 series aerospace. There's capacity there, but we could see a little bit of tightening maybe in Q4 for some 6061 plate. So we are, taking note of that now and doing things to make sure we're not short of that. So the aluminum team here at Ryerson is on top of that, trust me. So I think everybody will be covered. I see no problem with that. It's just something that we have to just know it's there.
If I'm hearing you guys If I'm hearing you guys right, the some impact on demand ultimately comes down to, right, the industries and what we're seeing, right? Aerospace kind of struggling right now, right?
Fits and
To a
starts.
degree.
Yeah, fits and
Yeah.
starts.
So, are there aluminum centric industries that we're seeing that could really turn on the demand spout before this all kind of gets settled?
Well, I guess to kind of flip the answer a little bit, what I was going to say was there are certain industries that Ryerson doesn't participate in too heavily. And I do want to make this comment just because based on some of the market intel that we've heard, the can sheet market is one that could actually be impacted a little bit more than common alloy and things like that, which is more where Ryerson participates. So it's not that every aspect of aluminum won't be impacted.
Yeah.
It's just the areas that may be, we just don't participate in as much. But if any of our customers are buying can sheet, they may be seeing some issues there.
And one other area, one of the recent, the 301 duties on China, right? Although they put them on all common alloy, it really doesn't affect us a lot because the duties on common alloy coming in from China was already very high anyway. So they did put them on. Now it's gonna affect a tax on maybe can sheet and foil coming from China, right? So we're watching that. But again, like you said, Nick, we don't participate really in the can sheet or the foil market, but that market's going to get hit with a little bit more duty coming in from China.
Makes sense. Not to throw another iron in the fire here, no pun intended. But we had that anti-dumping countervailing duty. It's hard sometimes to say on extrusions, right?
Mm-hmm.
And there's a ruling coming up July, maybe on that. Is that right?
Yep.
What
July
do you hear on
1st.
that? Well,
So-
okay, what do you hear on that?
So what I've heard is the DOC is going to remove Section 232 tariffs on the again, separate from that. Okay, the Section 232 tariffs are going to be removed, but we're expecting, the different countries in the Department of Commerce investigation on particular countries, we're going to see some duties come across for sure on those in July. But two different things, right? The DOC and the Section 232. Section 232, they're going to remove those tariffs.
Okay. Nick, you got anything else for Mr. Reed before I ask one more?
No, I'm good. I'm good here. But what I would say is, once Jim finishes up his little bit, certainly want him to keep around because we're going to cover aluminum in a little more detail just from a commodity standpoint. We're also going to cover stainless markets, so nickel, chrome, things like that. And if there, to the extent there are questions on, the physical side there, want Jim around for that.
Yeah.
Sure. Great.
And I'd be remiss if we had Jim on and we didn't talk about a common interest that the three of us share here is every time I talk to Jim, I ask him, I'm like, hey, what are lead times and what is this and that? And then I get to the important question, what kind of bourbon are you drinking these days? So I think the three of us have a shared interest there. So what are you recommending these days?
Oh God, there's so many. So the go-to, right? I'm a go-to Angel's Envy guy. I'm a go-to Woodford Double Oak guy. Okay. But if it's bourbon, I tend to go to the rye. I apologize, but I can go both ways. I can go rye and I can go bourbon.
Yeah.
So
yeah, Jim likes a little spice in his life. That's why he's living in Fresno where it's 108 degrees.
Yeah.
Exactly.
I'm the kind of guy, like, I mean, I got the go-tos, right? The Woodford Reserves and all that, but I always like kind of, there's a local here in Chicago called Koval, so Koval, very, very tasty. And I tend to, pop into minis or whatnot and just kind of, try here or there. One I've just got into is called Oak and Eden. I don't know if you've heard of that. Comes with a little spire in there, like a whiskey, so I don't know. I don't know if it was just the marketing that got me, right?
The marketing always gets you,
right? Like there's this, I'm like, it's got to be good, right? And it was good. So yeah.
My next trip to Chicago, I'll let you buy me a
yeah,
or so, for sure.
Yeah. How about you, Mr. Webb?
If I'm going to say that I'm partial to anything, I'd say probably Maker's Mark and Old Forester, some of the tried and true legacy brands. I mean, Buffalo Trace had been a favorite of mine. It's just, at least here in Chicago, it's so hard to find it. Or if you do find it, it's double, triple the price. And Cup of Joe's not paying me that much.
I think that was a call for an increase, so you can.
That's right. That's right. All right, as we always do, I'm going to cover a quick bit of the macro scene. and then we'll hop into the individual metals and things like that, because I think we do need the backdrop of what's going on within the macro scene. First things first, when we look at the far right-hand side of this chart, which is the global PMIs, I would actually argue that per the S&P survey, which is what we're looking at here, I would say we're seeing more green now than we've seen over the better part of a year. Certain regions like the BRICS, which is Brazil, Russia, India, China. So that'd be kind of an emerging market type trend. Looking pretty decent and looking pretty decent for the last couple of months. You look at China, 4 or 5 straight months of green territory, but certainly above 50, which is suggestive of growth. Looking down 3 from the bottom, we've got the United States that per this survey is showing a couple months consecutive of some growth in the manufacturing sector. And then even Europe, which 6 months ago would have been deep recessionary territory type numbers, we're beginning to see a little bit of a trough. It's not getting better yet, but it's the declines are slowing, so it's getting incrementally more optimistic. I guess while I'm on this page, it is worth noting that despite the fact that inflation, I would say inflation for most parts of the world is still trending above trend. Both the Bank of Canada and the ECB, which is the European Central Bank, both have announced in the last 7 days interest rate cuts of 25 basis points. So it's an interesting thing because, we've always been talking about that equation of, do you let the economy soften, or do you choose inflation, or do you choose the economy? And for now, it seems like both of those entities are choosing the economy, which may allow for inflation to continue to run a little hotter or a little above trend. Now, this is maybe the survey that caught a few more eyeballs earlier this week, and this is the Institute of Supply Management, the ISM. And the ISM manufacturing survey came out pretty weak, and I would say it surprised some folks, not just because the headline number was weaker, and that's 2 consecutive months in a row, but really because when you look into some of the line items, work your way down to the second item, new orders. New orders softened from 49.1 all the way down to 45.4. That's getting into some pretty not great territory. You go a couple more down into the backlogs of orders. We're going 45.4 all the way down to 42.4. That's getting a little spooky. That's kind of an uh-oh type moment that, I think we want to keep an eye on that and see if this trend continues, because if it is, that's going to be something that the Fed is going to want to acknowledge and say, it looks like the economy, at least within the manufacturing side of things, is cooling off a little bit. Now, interestingly, when we look at the services side of the economy, so this is going to be travel, leisure, hospitality, technological services, things like that. We're back into boom territory. We had one blip lower last month of 49.4. We're all the way back up at 53.8. So, we've talked in the past about the revenge of the old economy. It almost feels like we're quickly back into this world of the revenge of the new economy. Things like travel, leisure, technological companies are doing quite well. And so I think this kind of took people off the ledge a little bit and said, all right, if this makes up the larger percentage of the economy, well, services can kind of win out and keep the market elevated a little bit. So this kind of pulled us back from the ledge. When we look at end market demand, this is really similar to the trend we've seen for the last couple of months, maybe the better part of this year. But there's a heavy slant towards the areas that are doing well, have a large tinge of construction. Construction and data center are very, very heavy bright spots right now. So you're over on the far left-hand side, the biggest year-over-year growth. We're seeing it in non-res construction, residential construction, heating, ventilation, air conditioning. That's going to be data center related in a lot of ways. But motor vehicle shipments, that's a new one that's actually perked up a little bit. It's performing decently well. But again, as you look top to bottom, it's pretty okay. Again, a lot of it's centered around construction markets, but across all these categories, the bulk of them are in positive territory, which is still pretty decent. We're seeing things like oh yeah, go ahead.
No, keep going. Don't
Discretionary items, so boats, shipping, household appliances. Those are still some of the weak markets, and then ultimately on the energy and services side, that's a soft spot as well. But on the whole, it's pretty okay. It's not great, it's not gangbusters, but it's pretty okay.
Does the industrial machinery, does that include things like warehouse distribution, like conveyor belts, and am I thinking of the right type
Yeah, I
of
would say that's going to
statement.
be an area of it. I would say probably the bigger contributors are going to be things like mining equipment, ag equipment. So, your Caterpillars, John Deere's, people like that. Yeah, so going
Yeah.
into their applications.
Because I was wondering, we had that big boom of like distribution centers years ago, right? When, folks, we were kind of ramping up those. I'm wondering if it relates back to kind of the services spiking up a little bit, is there any kind of correlation there? But it's it
Yeah, I
certainly
mean,
looked
yeah,
that way.
certainly the machines that are running like, Amazon warehouses and things like that, that's going to benefit from consumer spending for sure.
And a question on the manufacturer, the ISM. Now that survey is sentiment, right? It's how they foresee demand. Does it foretell that maybe people are holding back with the election coming up and maybe manufacturing pulls? I guess do you think election year has anything to do with what's going on right now?
I personally don't. I personally don't think it's due to elections. I do think it's probably a little more due to the fact that, here we are 2.5 years into pretty heavy inflation. And
Yeah.
granted, that inflation rate is coming back down to earth. But, we've now gone, I'd say, 2 years since the last wave of stimulus that's coming to the economy. So actual money and checks being put in the economy. I think it could be more of an instance, my personal opinion is more of an instance of people just getting closer to a break even in terms of savings rates. That people don't have that, extra couple $1,000s of money to just spend on whatever discretionary goods they want. They're more getting back to tightening their waist, really looking at price tags, and I think that's constricting certain parts of the consumer base.
Yeah, that makes sense. Okay. All right. Tell us about some metals.
Yeah, of course.
Sorry
So,
about that. Nope,
yeah,
sounds
no.
good.
Yeah, and with that said, I mean, it is probably a decent time to bring up, we've seen this a couple times this year where there is very diverging data coming from some of these different surveys. So I think we want to see a couple months of these things play out before we can actually make a decision of, which one's right, which one's wrong, because right now ISM's pretty darn weak and a little scary actually. The S&P was, as we showed, above 50, which is suggestive of growth. It's the same thing within China. They've got two different surveys, one showing growth territory and the other one showing weakness. It's pretty hard when that happens to really make sense of why that's happening, except they're saying that, the survey respondents are just different industries, different people, different locations. They're feeling different things. That's not a great answer. I know that doesn't help people, make a forecast on how they're going to see summer months. But just anecdotally, I would say the ISM survey this week did get felt within markets much more than the S&P, which unfortunately was on the negative side. And one of the other things that aided into that was this, which is we have seen a couple jobs related reports that are not necessarily weak, but softening, maybe normalizing is the better term. This is the JOLTS job opening data, and we've talked about this for a number of years at this point. But you can see it's creeping back down towards 8 million people for job openings. But what's interesting is that's still 8 million job openings. That's still a lot of jobs to be had. It's actually 1.2 jobs still open for every job of a person that wants a job. So that still is actually a fairly tight labor condition, but it is normalizing. It's definitely headed that direction. It's suggestive that we are getting back into a territory where things could eventually be in a softer environment for jobs. And that would lead into things like lower wage growth and stuff like that. We also saw ADP jobs missed expectations by a little bit. So there are some small tinges that are early, but there are some small tinges that suggest that the labor markets are softening a little bit. They're getting a little squishy. And I do think it's worth noting, I'm going to skip forward 2 charts, just tomorrow, and it always seems to happen on Cup of Joe Thursday, the following Friday is oftentimes when we get the unemployment rate. And this is, it's going to be just as important as ever. We're currently sitting at 3.9%, which is extremely low. Again, that's not a sky is falling number at all. But, should we see that number have a 4 handle on it tomorrow, I can guarantee you there are going to be a lot of people at that point saying, the Fed needs to start, pumping the brakes a little bit, maybe bringing interest rates down. Because as you can see, going all the way back to the 1950s, usually when momentum starts to pick up in job losses, it doesn't typically stop. It tends to be sort of a knock-on effect. And as this chart shows, if you overlay recessionary time periods over this whole multi-decade period, it tends to also coincide with recessions. So tomorrow's numbers are going to be just as important as ever. Again, the expectation is 3.9, which if that's where it comes in, it's going to be a non-event, business as usual. If it comes in, 4% or above, there are going to be a lot of people who say, "Oh, this is not a trend we really want to continue," and there will probably be a lot of people on TV talking for rate cuts at this point. And even already, oh, sorry.
When are you gonna get the poll so we can get those numbers ahead of time on
right?
Joe Thursday?
I'm not sure Ryerson has the budget to pay for those types of things early.
Well, you're Nick Webb. I mean, people reach out of the blue and want to come on the show now, so maybe you'll get them.
That's right.
Yeah.
Yeah, we'll get the Bureau of Labor Statistics or somebody like that on next time.
Yeah.
But with the ISM data being a little softer than expected, with the jobs data being a little squishier than I think was expected, it's not much, but there's a better than even percentage that. So basically, the odds-on favorite right now, if we took a snapshot today, is that the first round of rate cuts for the United States is going to be in September. Now, a lot can change. If we see the unemployment rate go back down to 3.8 or 3.7, that number is going to get pushed out again. So it's all data dependent, and but that's what we know as of today. Is that if we played the guessing game, we play the betting game, there's an expectation we should begin to see at least a rate cut, and then maybe one more before the end of the year. That's the current expectation. Now, getting into metals, we've seen quite a bit of volatility in the last 30 to 60 days in both directions. And I would argue that within the industrial metal space, most of it is being led and guided by copper. Copper is the most traded of all the base metals. It's the most liquid. It also gets the term Dr. Copper, which tends to be, if you're a manufacturing company, it's pretty likely that if you're manufacturing, industrial products, you're probably buying copper. Copper is a good barometer for what manufacturing conditions are doing. And interestingly enough, this is a 5-year chart. We saw record high prices in the month of May. We saw prices actually for a very short period of time go above $5 a pound, which we cannot say that for nickel or aluminum or steel. We're a ways off of record highs in all those markets. So what's going on in copper? Well, I would say of all of the metals we look at within the industrial space, copper has certainly got the best story. It's got the best fundamentals. It's the tightest. It probably has the least investment relative to the potential demand that we may see in the next 2, 3, 4 years. A lot of that's going to be due to electrification trends, building out the grid, building out wind farms, solar, AI. All of those things are going to be using large quantities of copper. And so the story fits. And, I think maybe 30, 45 days ago, there's an old Goldman Sachs analyst. His name is Jeff Curry. He famously, maybe a month ago, said copper to him looked like the best bull case story that he's ever seen in his, I think, 30-year career. So pretty big headline grabber for some, big name like that to say something of that nature. And the market reacted. Now, the question is, did the market overreact? Are they pricing in too much of a rally? That's kind of where we are today. And it looks like there's been a little bit of profit taking in the last week or so. And we've now pulled back to closer to $4.50. So it doesn't mean the rally's over. It just means things got pretty overbought in a very quick fashion.
Is there still talk? I mean, I've heard in the past that the anticipation is demand for copper is going to outpace supply in like a major way based on everything we're doing with infrastructure and everything, the way it plays in the smart grid and all these others, right? Is that still a thing?
That's definitely the soup du jour. Yeah, I mean that's definitely the narrative within the commodity space among a lot of analysts right now. And I will absolutely admit that copper does have the best fundamentals around it. Supply demand balances are very tight. Inventories are fairly lean. And so that story does hold some water. I'll quote Jurassic Park really quickly, which Ian Malcolm famously said, nature finds a way. If prices get too high or if markets get too tight and there's a real shortage of copper, the market, it may not take a couple weeks, it may not take a couple months, but there can be substitutes to copper. And one of the substitutes, it could be aluminum. And so there would have to be, a lot of engineering work to get, the grid to rehypothesize around putting in a new metal. But these things can work themselves out. I think we see it too within like the electric vehicle battery. There were a lot of fears that we were going to run out of nickel or we were going to run out of cobalt or lithium. And what we've seen over the last 4 or 5 years is the chemical makeup of these batteries. It it ebbs and it flows and it changes based on what is cheap, what is available, what supply chains do make sense. So yeah, I fully hear you. The story is definitely a bullish one for copper, and it holds a lot of water. But I think, if things get too crazy, you see $6, $7, $8 copper, all of a sudden that makes things substitutes look a whole lot more interesting.
Sense. Yeah.
But the reason why I bring up copper isn't necessarily because Ryerson is massively big in copper. We're not. But what I think happened is copper's movement in price and copper's excitement within the market had a spillover effect into a lot of other things like aluminum, like nickel. And you can see it here in this chart. This is a 5-year chart. And again, 3 months ago, I called aluminum boring, and all of a sudden it woke up. And as Mike said, it said, hold my beer. And we saw about a 35% rally in the price of aluminum. We got up to almost $1.25 on the LME. Again, similar to copper, we're beginning to see a little bit of profit taking. In my opinion, the fundamental story looks a little squishier for aluminum. It still looks okay. It still looks like a balanced market, but it doesn't quite look as tight or as bullish as the copper story. And I'd say that's kind of reflected within the price. You saw that copper prices went to record highs. We're still 40, 50% off record highs on the London Metal Exchange price. So I think it would take something like a China coming back on in a really big way from a demand perspective to get things back into that sort of discussion. And it doesn't feel like we're quite there just yet. But we have seen movement higher within the price of the London Metal Exchange. Similarly, we've seen the price of Midwest premiums, which is shown here in this chart on the white line, just slightly ticking above 20 cents. Some of that's going to be due to the fact that protectionism is inflationary for premiums. It makes it more expensive to bring product in due to, tariffs and duties and things like that. The other thing that's taking place is, as I understand, I'm not a trucking expert, but there have been a number of fairly notable trucking bankruptcies and closures in the last few months. So what that's beginning to do is it's lowering the capacity of the trucking industry, which is kind of being offset by, well, we better raise prices for freight because it's a slightly tightening market. It doesn't look like a whole lot, but this blue line is basically the flatbed rate for trucks here within North America. And as you might expect, if the rate for a flatbed truck goes up, well, that's going to make it harder to move aluminum into the Midwestern portion of the United States. So for now, it actually looks like there's a not wildly bullish, but there's a slightly supportive story for Midwest premiums as we sit here today.
Hey, Nick, can I jump in real quick?
Yeah, of course.
Right now, there's also a big push on containers coming from offshore. There's some huge issues. I don't know if you were going to talk about this later, but there's some huge issues with the freight coming from across the ponds for sure. With the freight companies not being able to pick up the empties because of the Red Sea. So we're seeing our Asian freight rate in our containers almost double. Yeah, no, agreed. And honestly, like the chart comparing back to 2022 actually looks similar to this trend. It's if it sounds like if a lot of these things sound like deja vu, they should. They're not identical. They're not the same in scale, but they're similar in terms of the theme of logistical bottlenecks are continuing to get created. The Red Sea issues have not resolved themselves, so that things going on in the Mediterranean, that's not helping things either. There was even an oil spill just about 2 weeks ago in the Panama Canal that actually shut down logistics through there. So all these things have little echoes of 2022 when things got kind of crazy, but they're not the same, but they're rhyming with it. And then last but not least, on the aluminum side, I'm not going to steal the thunder from maybe one of our upcoming guests, which we may talk about here in a little bit, but Harbor Aluminum Conference is going on right now. This is a chart that they put out actually prior to the Harbor Aluminum Conference, which is taking place here in Chicago this week. And the reason why I know this is a little stale is because of the price that they're referencing, $2,555 per metric ton. That's actually a little low relative to where we are currently. We're a tiny bit higher than that. But the story is still the same. The story is 4 or 5 months ago, we were kind of I wouldn't say pounding the table. We were reminding folks on the podcast that when prices on the LME were at 90, 95 cents, maybe even all the way up to $1, we were digging into the cost curve of aluminum smelters. And what that means is for higher cost aluminum smelters, when prices are that low, they have to make the decision. Do I keep producing aluminum at a loss or barely making money? Or do I curtail production,
that helps to balance fundamental conditions for the market. Prices can then rally. I think we mentioned this a few months ago, but we did see a couple closures. We saw a Chinese smelter close. We saw a Spanish smelter close. I think we even saw an Australian smelter close. And so some of that did take place when we saw LME really grinding along those low prices. Well, the reverse can also happen. We're now into a scenario where prices are so high that we're in a scenario where nearly all of the market, even the really high cost producers, which is shown in this kind of darker bronze color or the darker gold color, that's the 90th percentile cost producer. We're way above that now. So there should be no concern by really any producer worldwide to say we're not making enough money. So what that means for the market is I would expect production numbers to stay high or to maybe even ramp up because there's money to be made, money to be had. But what's that do? The cure for high prices is high prices. And so we've seen a pretty rapid move higher. And I think we're getting into a realm where there's probably a lot of producers hedging that downside risk. There's probably a lot of producers who are saying make hay while you can. And we're certainly in that market right now. So that's kind of a very long-winded way of saying, we may see a little bit of easing and profit taking and maybe a little extra production come onto the market within the world scene. And kind of on the back of all that, if we look at LME aluminum inventories, so inventories that actually go onto the London Metal Exchange, they've jumped by about 500,000 tons just in the month of May. Now, does that look like gamesmanship? Yeah, that move does not look like a normal fundamental, just normal course of business thing. That to me is probably saying there's a lot of Russian units floating around in the world market and they needed to find a home and they found a home back on the London Metal Exchange. That's what that looks like to me. It's not necessarily a sign that the market got really, really loose and we need to panic sell everything. But it certainly is an indication that there are a lot of nickel units floating around. They may be of Russian origin. They may be of an origin that we don't want to touch or has tariffs on it, but it's still out there and somebody can take it. Now, lastly, on the base metal side, the price of nickel, similar to aluminum, similar to copper, it really got, this benefit of the spillover effect, in my opinion, because really we haven't seen a whole big change in the fundamental story for stainless steel or for nickel generally. Indonesia continues to ramp up production. But despite all that, we saw a 35% rally from February to mid-May, taking prices all the way close to $10 a pound. So that's ultimately feeding into higher and higher surcharges. But as you can see, what goes up sometimes goes down, and we've since seen about a 15% sell-off. I think that's just profit taking. That's hedge funds, traders saying, this has been fun. Fundamental story doesn't look a whole lot different. Let's take the cash and run. And that feels like what we've seen over the last couple of weeks. Do I think we're going back all the way down to the lows of about $7 a pound? Not necessarily, not unless we get weaker economic conditions both here and China. But could we see something more in like the 750, 850 range? Yeah, I think that's probably more in the realm of where fundamentals would suggest we could be. Because again, I don't think a whole lot's changed from a supply demand standpoint. And coming back to inventories, this is the London Metal Exchange inventory picture for the last year. And you can see, they just continue to grow. This one doesn't, to me, look like gamesmanship. This just looks like, gradual increases the flow of product into the system. And it's worth noting that in the last 30 days, the London Metal Exchange did approve a new Indonesian miner and refiner of nickel. So, it still looks like this trend of Indonesia looking to take over and become kind of the OPEC of the nickel and stainless world. Looks like that trend is continuing. And then last but not least, on the stainless side, I think we've talked about this in the past where I had always understood the chrome market to be once a month or once a quarter. There was a group of guys or gals who sat at a table and they just came up with a price. It was buyers and sellers, and they just said, all right, cool. For the next quarter, this is going to be the price. I always thought it was like 10 people. Turns out it's even worse than that. We've seen some headlines come out in the last few weeks that actually suggest that it's as few as 2 people, one producer, and then one who represents the stainless steel mills. So Glencore is representing the miner side. Glencore is a big trading company. They have a minority interest in a chrome miner. They're sitting on one side of the table. And on the other side of the table, which may in fact be in a pub in London, I don't know, is Aperam. Aperam represents the European stainless steel side of the community. And from what we understand, they basically came to a mutually agreed upon price, two individuals, that sets a multi-billion-dollar stainless steel marketplace. Well, somebody caught wind of that or learned of this and became spooked by the whole thing and said, we need to change how we do this. So we don't know what it's exactly going to be yet, but the chrome pricing reset mechanism for North American stainless steel is under review. It is very likely to change away from these two individuals in the pub who are coming up with the chrome price. More likely than not, if I'm a betting man, it's likely going to go to a monthly Platts index. Platts is just another data, service provider. What does that mean for the market? Unfortunately, it probably means a little more volatility. It means prices are probably going to fluctuate more frequently because it'll be a monthly index versus quarterly index. And this is a chart it's a pricing mechanism that I like to use just because the opacity of the way it's currently done is tough to track intra-quarter or intra-month periods. And what this chart is ultimately saying is we're basically at 5-year highs on the price of chrome. So, should this reset to a Platts index and go monthly, the impact is probably going to be a fairly elevated and volatile chrome price. But more to be seen there. We don't know the final details of that yet, but this is very fresh. This is going on behind the scenes with the North American stainless industry.
With all that with that and coupled with what's going on with nickel, how big of an impact is it going to have on surcharges going forward?
Yeah, I mean, you mentioned the fact that nickel prices are beginning to come back down, so that's going to soften the blow in the future potentially. Yeah. But over the last 3 months, I mean, yeah, we've seen 316 and 304 surcharges surge. They have really moved higher. I don't have the exact percentages in front of me, but I would say it was probably for 304, 15, 20 cents over that period. That's my guess.
Yeah.
And then 316 even larger just because its sensitivity to nickel prices.
Both are projected to, I think, go up a little bit in July.
A little bit more in July, and then maybe finally at that point is when you see a little bit of a breath of fresh air from nickel coming back down. But it's going to take you through midsummer at least.
There's always something going on with nickel, isn't there? There was a riot at a was it New Caledonia maybe last month or so? There's always
right. New Caledonia, which nobody really thinks about New Caledonia, but they 10% of their GDP is the nickel mining industry, and they were having riots because they are a French province. They were having some riots there that was helping to spark or feed into the rally a bit. I don't think there was really any fundamental impact on their production because I think it's such a big, important piece of their economy that I don't think they let it. But it was definitely a headline grabber that certainly fed into the bullishness for a period of time.
Always something.
Yeah, always something.
Yeah.
And last but not least, certainly, and again, I do want to highlight the fact that if you didn't get enough carbon commentary on this Cup of Joe, you are going to get a whole lot more when we sit down and talk to Josh Spores. But we'll give you a little bit of a sneak peek, which is carbon prices continue to drift lower. The market looks pretty well supplied. Lead times are short. We're still elevated, and there's still a spread to North Europe pricing and to Chinese pricing. That spread is coming in. It's still somewhat elevated, but it is certainly coming in. I think we'll continue to see that premium exist. But the arbitrage of going out and buying foreign product to bring it in, it's fairly quickly closing up just because we're seeing domestic prices come down by so much. How far down will we be going? I think this will be an interesting one to talk with Josh Spores about because he'll have some forecasts himself. But it's an interesting environment right now because right now we've got Cliffs Index at 800. We have Nucor CSP as of today at 780. We have the CRU that came in yesterday at 750, which is an implication that somebody out in the market must be selling below 750. For all of these things to exist, that's kind of what it all has to mean. And again, we'll get into these details with Josh. But how low do we ultimately go? Well, the expectation for scrap prices in the month of June is, I'd say, slightly lower. To certain regions are going to see a little lower, maybe a decently lower move. But it's sounding like anywhere from about $5 to $20 per metric ton month over month. And what does that mean for steel prices? Well, it means that the lower scrap goes, the lower mills can sell steel and still make the same profit. So if we're using scrap as a proxy and scrap futures as a proxy, it's looking like low sevens could be, a fair starting point for, if we were going to place a prediction on where we might bottom out. But what's interesting is there's already a fairly large upward slope in the futures curve. And I was actually talking to my analyst about this earlier today, because he was like, well, the scrap market plus 250, that's a barometer. But if everybody goes in and stockpiles a bunch of steel, the price can jump right back up. And I fully acknowledge that, and we've certainly seen that at various points in different cycles. The caveat to that, I would say, is summer tends to be a little bit of a slower time. There is a fair amount of new capacity coming online in the coming months. So the stars don't quite feel like they're aligning to create this perfect storm of everybody piles in and stockpiles and pushes lead times out. I may be wrong on that, but for now it seems like a pretty tepid market, and one that's going to see more supply in the coming quarters versus less. So yeah, that's what we know about carbon, but there will be much more to discuss with regards to forecasts and CSP and CRU, and it's going to be a ton of fun, and we hope you can all tune in for that one.
Yeah, it's going to be a very interesting discussion. I'm really looking forward to that, just based on, all that's been going on. And I think it'll really kind of give a deeper understanding, and what we'll do with everybody who's a registered follower here of Cup of Joe. Once that episode goes live, we will send out an email that it's live. And you alluded to it as well. We're also going to be speaking with one of our colleagues who attended the Harbor Aluminum Conference in Chicago, Jeff Notice, and get some inside scoop there so we'll have a few special episodes coming up here. And not to be another downer here, brought up the riots, but one of our listeners also brought up, or viewers brought up, a Syrian copper smelter was bombed in Israel airstrike. So that could be maybe a few days ago. So that could be impacting copper prices. I don't know. Do you see things like that? I mean, these are things you talk about, right? The little things that life's going to figure out, or how did you phrase it, right? Like, things are going to happen, right? That you can't control. And this is just another thing that could really hurt the price of copper.
Yeah, not to. I certainly don't want to downplay the conflict that's going over there, and the conflict is certainly going to have an impact on supply chains and commodities generally, and it certainly puts a little bit of a risk premium into commodities broadly, particularly oil. To be frank, I hadn't heard about that airstrike hitting the copper facility. My guess is it wasn't overly large, but I could be totally wrong on that. Admittedly, I just don't know a whole lot about it, but I hadn't seen that. But yeah, those are interesting.
Yeah, same. So why don't we, so again, we're going to have this conversation next week. We will follow up we will send out a note when that goes out. Really encourage everybody to download, follow us, listen to your favorite podcasting platform. But this is the time when, give us what are your key takeaways? There's a lot going on right now. Jim, you being our guest, I want you to kind of give us a few, what's on your mind going forward, and what are some key takeaways listeners should take away from today's discussion?
Sure. On the aluminum side, I just want to emphasize there's not going to be a problem with supply. Supply is going to be there. Capacity is there. Your needs are going to be met. I see no return to 2021, no allocation. We're not even seeing any surcharges anticipated from the mills for the rest of the year, from what we can tell. Things are okay. Capacity is good. Volume is there. Kind of going back to what Nick said on a couple of things. Things are going okay. I mean, it's going well. And there's not going to be a problem with that. I'm not, of course, and it could change as soon as we disconnect from this, but I'm not anticipating any major changes in conversion. I think we have to watch the LME and that whole situation with the premium. But all in all, things are okay. I mean, we got your back on this. Ryerson has you covered on the aluminum side for sure.
Yeah, and I would actually just take that and echo it and extrapolate it across pretty much all the products that we deal in. I would say that's true in stainless. I would say it's true in carbon. We're not running out at the moment. Are we in dire times? No, we're very much somewhere in the middle. I think the good news for our customer base and for Ryerson in general is I think the volatility is going to settle down a little bit. You take aluminum, for example. Did we need to be at 95 cents on the LME? No, that's probably too low. Did we need to be at $1.25 3 weeks later? No, that's probably a little too high. Somewhere in the middle probably makes some sense. It's a fairly well-balanced market. And I think that same general commentary can probably extrapolate across a lot of things. So, where I would really want to leave it, and I just want to have a quick bit of fun because we're in the summer months right now. For anybody who has the ability to screenshot, I would heavily suggest you screenshot this recipe because hot bourbon on a 108-degree day is just it's not the best. It's great when you're indoors, but if you're outside on the patio, I highly recommend this cocktail. It's a whiskey sour with a little bit of a twist on it, which is egg whites. If you haven't had egg whites in a cocktail, highly, highly recommend it. I promise you won't get salmonella. Just use fresh eggs, but you got your ingredients up top. It's whiskey, it's lemon juice, and it's simple sugar. If you don't have simple sugar, toss in a little honey or an agave nectar or something like that. Toss in an egg white, dry shake it. So don't put ice in it. Dry shake it for 30 seconds or so, and then put your ice in, shake it up, and you are going to have yourself the best summer ever. Relax, kick back, enjoy the lower volatility of metals prices. And that's where I want to leave it.
I like it. I'm going to give it a try tonight.
I was telling Nick earlier, the egg white was throwing me, but hey, I'm all on board. We'll give it a try.
And always drink responsibly from your respective web.
Lots of beer, bourbon references here on this show, but I love this. So we'll leave you all with that. Cheers. Until next month.
Cheers, everyone.
Thanks again.
Thanks, everyone.
Yeah.